self-storage acquisition video that we have. And we have a facility that has U-Haul rentals. We're going to add propane to it. We actually have another facility. It's actually an RV park, but we have a RV, our propane filling station. So we do a propane exchange. And that was probably one of the things that attracted us to storage too. And this is kind of a unique to commercial just in general. It's just the different profit centers you can have. I mean, we can have propane, we can sell tenant insurance, we can sell U-Haul rentals, locks, storage, and moving equipment, boxes and tape and things like that.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Ryan Gibson. Ryan is the Chief Investment Officer and co-founder of Spartan Investment Group out in Golden, Colorado. Spartan is a real estate development and syndication company focusing on self-storage facilities throughout the United States. Ryan has a very seasoned background. His role with Spartan is investor relations and capital raising for projects. To date, Ryan has raised over $14 million for projects and also has experience in ground-up development of luxury condos, multifamily, and land development projects. Ryan, thank you so much for taking the time to be on the show, and how are you?
Good, Dwayne. Thanks for having me. Appreciate it.
Yeah, I really appreciate it. Yeah, I understand you're out in sunny Hawaii right now on a conference, so I really appreciate you taking some of the time in the early morning to speak with our audience and our listeners.
Yeah, no problem. Thanks for having me. I'm out here at the Anderson Advisors Executive Retreat, which is a little thing that Anderson Advisors puts together out here, and I'm speaking on self-storage investing.
Cool.
Yeah.
So the one thing I'm really excited to kind of talk about this topic, I had mentioned before, this is the first time we're actually covering self-storage. We really wanted to kind of learn more about it. Our group, Passive Investors Club, we focus on a diverse real estate portfolio. So I do single tenant net lease. I've a couple of speakers talk about apartment investments and shopping centers and all different types of stuff. But in a sense, self-storage is another key industry. And I'm glad that you came on so we can kind of talk a little bit more in depth about it. But before we kind of kick things off, would you mind kind of sharing about your background and how'd you get started in real estate?
Yeah, sure. So we started as a residential developer in Washington, D.C., and my business partner and I met, and we were neighbors. We started a business, and we've kind of scaled to 11 full-time folks at our corporate headquarters in Golden, Colorado. And we have about 6 projects, 6 sites active right now. We've had 9 completed projects that have gone, through full completion. And we are doing everything from the property management, asset management, to the feasibility studies for deciding what sites to build or purchase. And we're also doing acquisitions and then our own capital raising. So we kind of got our start with residential and then just transitioned into commercial when we really wanted to scale the business.
Was there, what kind of sparked off self-storage? I mean, most people when they first think of real estate, they think of residential and then multifamily and then maybe shopping centers. But self-storage is not like the most sexiest thing that's broadly marketed out there. So why self-storage?
That's exactly why, because it isn't sexy. Because 3 things, actually. Our company looked at all asset types in 2016 after we had our few experiences with residential, and we said, hey, what do we really want to focus on? And we kind of decided on 3 things: easy to operate, easy to evict, and easy to maintain. So, those were kind of the 3 things that I really wanted that our company really wanted to focus on for our next steps in our growing. We wanted to have everything done in-house. We have our own property management, asset management team, for example. We wanted to do kind of some of the construction. We wanted to oversight that. And those 3 things are really what appealed to our decision to move into storage. So we took 90 days and we just learned everything we could about it. We went to all the conferences, we traveled around the country. And then after we sort of got our strategy set, we started focusing on, because now we knew exactly what we wanted to buy and exactly kind of what we were looking for, we started doing purchasing self-storages.
Cool. A lot of people, when they hear self-storage, they kind of think of the show Storage Wars or any of those types of pawn shop, those things like that. So they not really too familiar with the actual nuances of the business. Can you kind of break down what type of self-storages are out there? I understand you have like RV, record stores. I mean, there's a whole bunch of different types of stuff. It's a very interesting business, but would you mind breaking it down for us?
Yeah. So first of all, the storage wars, that kind of application applies to just about all the businesses. So basically what's happening in storage wars is that when somebody puts their belongings in self-storage, they are giving up they're giving a lien waiver or lien right to the owner of the facility, so that if for whatever reason that person were to not pay, the owner in the lease has the right to put a lien against their belongings. And if they don't, and if they get certified letters and go through the state and legal processes, we can auction off their belongings to capture the rent that we had lost, and then also get our unit back quickly. So usually it takes anywhere from 30 to maybe 70 days or something like that, depending on the state. And but to get to your question, there's kind of two basic types. There's temperature controlled and non-temperature controlled. So kind of your outside regular storage, roll-up doors. You have RV storage. Some of the storages may have some kind of specialty storage lockers, wine storage, or just particular valuables, things like that. But generally, the kind of the 95% of the industry is just going to be your standard roll-up door, and it's either going to be exterior or interior climate controlled, and they're going to range in sizes. So that's anywhere from a 5x5 unit, which is like a little locker, all the way up to maybe like a 10x30, or maybe even a larger one, a 10x50 or something like that, if you're storing large equipment, vehicles, things like that. So and we pretty much do everything. So we own non-climate controlled, just your standard drive up. You can roll open the door. Some people actually prefer those because they like a wide drive aisle with a unit that they can just drive up to. And then we also have interior climate controlled storage, where people can go inside the building, and if it's really hot, they can not be in the heat or the cold and keep their belongings stored that way. And but sometimes it's maybe not as convenient because you have to go inside of a building and kind of navigate around through the interior corridor hallways. So you kind of run the gamut, and that's why we do a market study. We make sure that we understand what the market wants in that particular location to decide which storage units to buy.
Kind of keying off of that last point, is there facilities that have multiple things for multiple purposes, or just like you just have the single story roll up doors, or you just have one that's specifically for special cases like paint and paintings and RVs and different types of stuff like that?
Yeah, so not really. I mean, they're all pretty much purposed for whatever you want to use them for.
Gotcha.
And that's kind of how we run them now. I mean, we have RV storage, we have boat storage. We actually have a boat specific storage in Fort Worth where we just store boat and RVs. They're all interior. There's actually 60,000 square feet of rentable storage there with 209 units. And that's just a boat storage facility. And we look at the plugins there, to plug in, any equipment for the boat. We have a light. And then for that one, we only have gravel on the floors just because people mostly are storing their boats and their vehicles there. On other facilities, in those facilities, or those units are larger. On other facilities, it just may be more conducive to storing personal belongings or, equipment that a business might need at a particular location.
Is the leases are similar to more like residential, like they're yearly or quarterly or monthly? How do those usually work?
Yeah, the leases are month to month. So they're they're temporary in nature, but we've had tenants that have stayed since 1989. So even though they're month to month leases, they just basically sign a lease and then it kind of rolls month to month after the lease gets started. So there's still protections. There's just no obligation for the tenant to stay a certain amount of time.
Okay, cool. And as far as you had mentioned a little bit about the value add, the temperature versus non-temperature controlled. Is there any other stuff I heard in cases like they have like propane filling tanks and U-Haul rentals? Is that stuff that you guys do, or?
We do.
Oh,
Yeah, we
cool.
do actually. Yeah, if you go to our YouTube channel, Spartan Investment Group, there's actually a self-storage acquisition video that we have, and we have a facility that has U-Haul rentals. We're going to add propane uh, to it. We actually have another facility. It's actually an RV park, but we have a RV, our propane filling station. So we do a propane exchange. And that was probably one of the things that attracted us to storage too. And this is kind of a unique to commercial just in general. It's just the different profit centers you can have. I mean, we can have propane, we can sell tenant insurance, we can sell U-Haul rentals, locks, storage, and moving equipment, boxes and tape and things like that.
Yeah,
We
that's
can
the
do,
thing that's very interesting. I like that you have all these different profit centers like that. As
yeah.
far as kind of like the operations, like the typical expenses, I mean, I'm just imagining with, like apartments, you have like a lot more hand holding, property management, maintenance guy. I mean, but with self-storage, you build them right, you have good, good, strong facilities. But what's kind of like a typical expenses, operations look like?
We underwrite everything at about 40% expense to gross income ratio. Sometimes it comes in less than that. Sometimes it's in the mid 30%. But we don't have toilets, cabinets, countertops, appliances, paint, trim. Well, we have paint, but not in the sense of I need to refresh the inside of this unit so it looks nicer. We don't have carpets and floors and things that need to be replaced or updated or anything like that in the unit. So, I like to say that was one of the reasons that attracted us to it was the ease of maintenance. I always joke that we have one facility. It's got about 750 units, and there's one toilet. So,
If it gets
versus
clogged, that's pretty easy to handle.
that's pretty easy to handle. Versus an apartment building, if you have 735 units, your toilet count could probably be well above 1,000,
Yeah.
and you're going to have somebody kind of on the ready to fix those things. The other thing that I like about it is just like you said, we don't have we do have a maintenance guy at one of our facilities, and of course, that's necessary. He's mostly there because we actually have a car wash on the property.
Wow.
But the maintenance really is pretty benign, pretty low when it comes to storage units. And the requirements, a unit gets moved into and when it moves out, there's really not a whole lot to do other than sweep it out and rearm the lock, and it's pretty much good to go.
What's kind of like a target for you guys? Are you guys seeking new development or more repurpose of other old buildings into self-storage? And what's kind of like the advantages and disadvantages?
Yeah, so we look at doing mostly self-storages that have value add to them. So we will buy a facility with inflow cash, in-place cash flow, which is great. We love those. And then we add on to them. So we can say, okay, we've got this 9-acre site. It's got 80,000 square feet, day one cash flow. And then we have 2 acres of land that we can expand upon. So we'll come in and then we'll do a market study and say, well, if we build this additional self-storage, can we actually deliver the units? And so we will, we look for that. That's kind of our one of our ways of looking at it. And so we'll buy the facility and then we'll expand the facility. And we're building value in 2 ways. We're have the cash flow from day one, and we're also getting the equity out of the build by expanding the facility by another 40,000 square feet or so. The other thing that we look at is ground up development. So in this market, it's pretty challenging to find existing self-storages that have value add to them. Maybe you find that there is land there, but you can't build on it because of easements and restrictions and things like that. Or maybe there's land there, but there's no demand. And that's probably the number one thing. If you took away one thing from today, it would be make sure you have the demand to build what you're building, because a lot of people think, well, it's a good area and it's great, and I should be able to build it just fine. The housing market here is great, or something like that. You got to make sure you know what metrics actually drive it. Because like a city like Austin, where it's very oversaturated for storage, or a city like Denver, which is very oversaturated for storage, people might be, doing great there in other real estate sectors, but storage is really not doing so great. So you make sure you do your demand study, but we also look at this ground up development as a way to really build a lot of equity. So, it takes longer. There's no in-place cash flow, but your prize is sort of waiting for you at the end when the facility is built and leased up. What we like about ground up development too is that it has multiple exit strategies. So if we find a site that has high demand and we can put it under contract and go through all the entitlements, that project, that raw land is worth a lot of money when we get to the other side. That could be one exit point. The next exit point could be when we build the facility at certificate of occupancy, we could sell it to a national REIT or a developer, another self-storage operator that wants to take it through lease up. That could be another exit point. Or we could lease up the building and stabilize it and do a refinance of some of our initial capital back. Or we could sell it at stabilization or hold the property and cash flow. So there's, that's what we really like about ground up development is it does come with some risk, obviously, but everything does that we do here. But we like the multiple exit strategies and the value that you can create from it.
Awesome. Yeah, I kind of like what you're mentioning, just kind of like the market study. But what do you think about as far as like, have the Amazons and the e-commerce of the world where they're kind of changing the whole landscape of the industry, where a lot of buildings that were, very vibrant, like shopping center areas are starting to become vacant because they're just don't have no use.
Sure.
Is that something an opportunity for self-storage, or is it, of course, a specific, case by case basis as well?
Yeah, we're actually looking at a converted Macy's. So a Macy's that went out of business, they converted it into self-storage, and we're looking at the purchase of it right now and taking it through its lease up. A developer bought it, repurposed it, and it's leasing up now. And we're going to buy it as a lease up potential. So the opportunities are the market is changing, and it always is, and you always have to be ahead of it. There's always going to be disruptors in the space, like companies like WeWork. And, with storage, there's a company called Clutter, and they're trying to disrupt self-storage. And, here's the thing. People love looking at their stuff. They love going to their facility. They like rolling up the door. They like rifling through it. So some of these disruptors say, well, we'll just deliver it to your door. You pay a thing, you go into the app and you push a button and it pops and it shows up at your door. So I've went through that and I've looked at the pricing, and it's more expensive than a storage unit. Obviously, the convenience of having something that comes right to your house is going to be more expensive. So, you have those disruptors that operate at a net loss for a long time that, have a VC backing, that's always definitely a threat. But at the end of the day, storage, the national average occupancy is above 90%. It's a $38 billion industry. It's been growing. There's actually more self-storages in the United States than Starbucks, Burger King, and McDonald's combined. So there's actually 55,000 facilities, and not just units, 55,000 facilities in the United States. So it's a booming industry. And while there always will be disruptors and competition and changing markets, there's also a ton of opportunity still in the space for the right project.
Yeah, absolutely. Even, specifically, self-storage is kind of like a really recession-proof type of investment because, when the economy goes up, everyone's buying new stuff. They want to store stuff. And then when it goes down, people are kind of downsizing. So that's really awesome. And, just you highlighting it even more, it kind of makes a lot of sense because, like I said, there's a lot of disruptors that comes in, but the market always speaks. They're going and doing this at a net loss, and hopefully they eventually break even. But, eventually the market speaks, and, self-storage is still the most, beneficial and value-added product out there.
And I will say too, that's a good point. I mean, last recession, self-storage was the least foreclosed upon asset class in the commercial sector. So it's tied to life events. When people move, age, relocate, construct, expand their family, shrink their family, millennials are now becoming a huge user of self-storage with their, moving around the country, starting to, finally start their families, things like that. That's really kind of what's driving it. So life events are always going to happen regardless of the recession, and people have an attachment to their belongings. So it's really kept self-storage charging forward. I also don't want to discount the fact that, there's a fairly large percentage of our self-storage business that is used by businesses. So people that sheet metal contractors, drywall guys, newspaper companies, food distributors, local government uses some of our self-storage space. So it can't be discounted that, anywhere between 20 and 40% of the facility might be actually used by businesses that rely on the self-storage space.
That's a really great point. Even paper stores, 'cause I hear that saying, that's a really big thing as well. But yeah, that's some awesome points there, and thanks for bringing those up.
Yeah, no
As
problem.
far as kind of like talking about your business model, are you guys the primary sponsor? You guys JV with other investors, or you guys do everything yourself in house?
So we rely heavily on our individual private investors. So we are a self-storage operator. So we are everything. So we're property management, asset management. We are the sponsor. We're other operator. We put the whole project together. But we have individual passive investors that, say, hey, you know what, Ryan, what you're doing is amazing. We really love what Spartan is, the focus and the mission. We'd like to invest with you and be part of a project. So we have about 1,200 investors that are in our network, and about 15% of them at any given time are active in a deal. So somebody can invest some capital into a project, and then they invest alongside with us. So, we do everything. We send them monthly updates, quarterly updates. We send them financials. We do teleconferences with our investors, so they can know exactly what's going on with the project. So we have the opportunity. So we bring our investors along with us. We have done a JV with some other operators, one or two here and there, but mostly we just do our own projects.
Cool. As far as kind of like working with investors, of course, in order to kind of grow the business, you guys are looking at more capital at some point. I know that you do a lot of educational stuff, like you're out there in Hawaii, just kind of speaking about the business, speaking about the industry in general, and just kind of letting more people know about this. Like I said, I learned so much just being on this short call with you. Is there anything else that you do besides kind of speaking and stuff to kind of engage to let the people know what's out there, what opportunities exist?
Yeah, sure. So, number one, I just always try to provide value first. So, with that mindset, we do investor consultations. So, sometimes investors have questions about, well, I've got this HELOC or I've got this retirement plan and I'd like to roll it over to a self-directed retirement account to invest with you, or I've got a taxable stock account that I'd like to leverage. How does that work? We do investor consultations, all the time to kind of help people kind of listen to what other folks, what their preferences are and what they're looking for, and help match them up with good investments. So we do ongoing consultations like that on a regular basis. But we're out in the community. We like to speak to folks and educate people on the industry, just generally, so that they can say, that's an asset class that I'd like to be in. Can you do more? We also do a monthly webinar. So, when we do our due diligence on these properties, we like to run our 540 point due diligence checklist. So for example, this month, we're going to do a webinar on what's in that checklist. We don't have time probably to go through everything in the checklist, but just kind of how we run a checklist when we're taking over a property and how strong our due diligence is, to do that. We do investor happy hours and we do on-site property tours. So we do have properties that we invite our investors to. They can come look at the property, we come through it. We kind of do open houses there. So, because that's what really attracted us to real estate in the first place was, hey, you can invest in something and you know exactly what you're investing in. You can go look and touch it, feel it.
Touch it, absolutely.
And that's huge. And I'd say, one other thing that we do is we get real estate, tax, legal, and other professionals on the webinars so that we can help our investors better inform them of some things that they can do to best position themselves. So for example, we do cost segregation, bonus depreciation. So we went through a full example of one of our projects, how much depreciation they're going to get, and really help the investor understand that if you invest in this project, you're actually going to get a loss throughout the entire investment until it sells, but you're going to earn capital, cash in pocket. And just some of the powers of that. And that's actually what brought me out here to this conference this week, is that it's our tax and legal professional company is hosting the event. So, it's just a really great way to just inform your investors and adhere to our mission, which at Spartan, our mission is to improve lives through real estate. So everything we do, we try to say, how can we help others, achieve their financial success or make their lives a little bit better by transacting with us through real estate.
Yeah, I love that approach a lot. Just adding value, just providing just tons of information, just kind of open people's eyes and seeing the different opportunities that's out there. So that's awesome. For the audience to kind of get to know about you a little bit more, what's kind of like a typical day for you, and what do you have any specific morning routines besides being up at 3 o'clock in the morning?
Well, yeah. So, I like to get up and I like to get ahead of the day, just like yourself, Dwaine. I have a daughter. Sounds like you have 4 kids. So,
Yeah, just 2, but it seems like 4 sometimes.
Gotcha.
So.
Oh, gotcha. Okay. So yeah, I've got a 2.5-year-old daughter and a boy on the way due in January. So I like to get up early. I like to, if possible, I like to do like 30 minutes of exercise. In the morning is the time to clear my inbox. I treat my inbox like a task list. I got that from my wife, actually. She taught me that.
Mm-hmm.
So I actually will, every email is responded to or deleted. I take my inbox down to 0. I know it's crazy. Because usually by the time it's 1 o'clock, it's full, it's back full again. But, during the day, I'm on the phone a lot. I do a lot of investor consultations, podcast webinars, face-to-face meetings with people. So, that's the time I can really get caught up, before the world gets switched on. It's a little difficult living on the West Coast sometimes because the East Coast is already up at, at 5 a.m. At 5 a.m. they're already, it's already 8 a.m. And, and 3 a.m. in Hawaii, it's already 9 a.m. So, it's definitely something that, helps me kind of get my day going.
Cool. Is there any resources out there for people to learn more kind of generally about self-storage industry, or kind of like the process that you can kind of point the listeners to?
Sure. Other than our website, Spartan-investors.com, we have a lot of education on there. We have a lot of education on our YouTube channel. But the Self-Storage Association, the SSA, and the ISS, the Inside Self-Storage Association, those are 2 associations that you can learn everything about self-storage through. And they have 2 conferences every year. I think one in Vegas and one in Florida typically. But the SSA and the ISS are the 2 kind of governing bodies of the industry.
Oh, very good. My last question I always ask on my guests is, what are you most grateful for?
My team. I couldn't believe it the other day. I was counting how many people that we've hired and brought on board in the last 60 to 90 days. And it was incredible that we have 11 people now at our corporate staff, and they're all very good. Everybody there is such a good asset, and we did such a good job of carefully hiring and selecting the people that we have. And I'm just so grateful to work with good people. That's, because that's really all that matters. Your experience is important, but your willingness and your grit and you're just the type of people you work with it's just so critical to, I think, the overall, success of your business and your day. So I'm just very grateful to work with good people.
Awesome. Well said. How do we get in touch with you, Ryan?
Sure. So my email is Ryan, RYAN, at Spartan-investors.com. You can hit me up on LinkedIn, Ryan Gibson, or you can go to our website. Our website's Spartan-investors.com. And there's an online intake form. You can get in touch with us there. But, my email is probably the best. So
awesome. Ryan, it was a pleasure to speak with you, learning more about the self-storage industry. I know we can go really deep into it. There's probably a lot of different nuances, maybe for another call. But again, we really appreciate you introducing this to our audience, and so we can learn more about it. And investors who are curious and want to diversify their portfolio and get involved in the self-storage, so we recommend them to reach out to you and just have a conversation. But Ryan, best of luck at your conference and speaking. Best to you and the family and your new addition. Thank you so much again, and we'll look forward to connect with you again soon.
Thank you so much, Dwaine. Have a good day.
You too.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.